It's only entertainment.
Welcome back to The Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast.
All right, my guest today is Jesse Redmond, Managing Director, Water Tower Research. Jesse, thanks again for being on The Talking Hedge.
Yeah, thanks for having me back. Appreciate it.
Absolutely. So we want to dive in to see what happened for the first half of this year in cannabis across 15 different markets that Headset tracks, and then kind of give a little projection on where we think the industry might go next year. So let's just jump right into that. Looking at the total sales across North America, including Canada, California, the big, not big winner, but obviously 420 million in 1 month in January is significant, and looks like they're going to be up there for a while. New York thought they were going to take it. What's your take on biggest states out there, Jesse? Because you're from California.
Yep.
Do you see like this new emerging market kind of taking over?
Yeah, I don't know about taking over. I see it getting more stable, but not growing as quickly as it should. You know, Josh, the big issue out here is access and high taxes. So when I buy $100 worth of cannabis in Santa Barbara, where I live, it's $133 out the door. If I go to LA, it's about $150 out the door. And that doesn't account for some taxes that happen even before the retail level. So California is still struggling because the taxes are so high. And if you're in the traditional legacy market, black market, pick your term, they're not paying taxes. And so the legacy market continues to be a huge issue here, and taxes are too high. Second issue is in California, we do not have enough stores. We're stuck around 1,200 stores. We have 12,000 liquor stores for perspective, so about 12 times as many liquor stores as cannabis stores in California, and we need about 5,000 stores to be healthy here. And so sometimes, Josh, we talk about these older markets, your Californias, your Colorados, your Washingtons, and your Oregons, and we think, oh, well, those are all fully evolved markets. Well, California's been online for, 5 years now, since 2018, but it still is at about 20% of where it should be. And so I hope with these new states, for example, like Ohio, they started in California, we have a 15% excise tax, and that isn't all of our problem. It's delaying of taxes. It's not enough stores. There's other issues. But Ohio started with a 10% excise tax, and now they want to go to 15%. So I hope that with some of these older markets like California that are okay, but they're not great markets. They're actually not okay. That's being too nice. They're not good markets. They aren't profitable for most people. They are profitable for some people. I hope these newer states can learn from some of those mistakes. So yeah, I'd say I'm still a little bit disappointed in California, but obviously it's the biggest market in the US. It's the head of cannabis culture, and there's a tremendous opportunity here. We just need the regulators to chill out a little bit on taxes and get rid of these local ordinances that allow cities and counties to completely ban cannabis. So what happens here, Josh, is you have some cities like Lompoc, California, with 40,000 people and 12 stores. So they're way overserved because they have an open license policy. Then you have areas like Manhattan Beach and the South Bay by LA where they have 0 stores because the local ordinances ban them. And so California has a lot of potential, but we need to open it up in terms of having more stores, and we need to chill out on the taxes so we can compete better with the traditional market. So I said California, good market in terms of size, but I feel like there's much more work to be done here.
Yeah, there's a lot to learn from the California market, Washington market as well. Any kind of legacy market. Washington changed it up, and so some of these counties that opted out, they don't get tax money anymore. So if you want to opt out, that's fine, but you get none of that money. And so you're seeing a lot of people see that incentive and be like, okay, I guess we'll change our mind here. And there's obviously a lot more money there. I think if you look at the overall trends in the first half of 2023, you could see a lot of stable prices right here, or sales rather. And then in emerging markets like Arizona, you're seeing that kind of come down to more of a normal level. The exception being Michigan. They're the outlier that actually saw an increase, for whatever reason. But some of these other places are starting to level out.
Yeah, I think Michigan was difficult for a while because another open license environment led to a lot of competition, a lot of stores, a lot of cultivation in Michigan. But what that did was it drove down prices, which initially sounds bad, but I'm curious your take here, Josh, because lower prices are a trade-off. So price compression is the fancy term we like to use. When price compression happens, all things being equal, revenue drops, and more importantly, margins drop. But in Michigan, what happened is that more stores open, which is helpful, but also the lower prices converted people over from the traditional market, because broadly speaking, there are exceptions. Like if you want a traditional market brand or you just don't like to work in a legal system, there are those folks out there. But broadly speaking, if you provide access at a similar price point, most people convert to the dispensary. Just like if you want, Jack Daniels, or if you want a 6-pack of beer, you don't go to your local friend. You don't go to your friend who has a distillery in the garage. You usually go to the liquor store. And it's not a perfect analogy, but I think cannabis kind of works the same way. So Michigan has been interesting. Good MSO state as well because of that open license policy. I forget how many stores TerraSend has. I want to say it's in the 20s, but there's a lot of scale to be had in Michigan. So that's gone from what was a pretty tough market around when they did that Gage acquisition a couple of years ago to being a positive market for TerraSend, and Ascend does well there. Several others do well there. So I think Michigan, yeah, it's nice to see those numbers going from 213,000 in January all the way up to 255 in July.
Yeah, we can learn from previous industries. You don't see bootleg liquor or people selling cigarettes out of their trunk. However, there is a really popular brewery in North Seattle in a guy's garage.
Oh, really? Yeah.
But what people can learn from is DC, specifically 6% tax. Like that's probably not realistic long term. You might not get the 37% we have in Washington, but anybody in DC, don't get too comfortable because that's not realistic. But looking at maybe what's going to happen down the road. You can kind of see with sales over since 2020 all the way through the first half of this year. I think you got to take, in order to smooth these numbers out, you have to kind of take COVID out of it. So a lot of people were working from home, consuming more, having more disposable income through checks. So if you remove 2021 and even 2022, that might give you a better idea about the trajectory of the industry, which still, if you double the first half of 2023, it still looks like it's an upwards trajectory. It might even be a record year.
Yeah, look at Colorado. That looks like an improvement. BC would be an improvement. California would be a slight improvement. Yeah, so one of the big things I look at, Josh, is I kind of bucket a lot of these West Coast markets together. They're all unique, but I think we can kind of look at these legacy markets, your Californias, your Colorados, your Washingtons, and your Oregons. And for a while, those were, I wouldn't say uninvestable, but they were very selectively investable. Broadly speaking, they weren't great investment markets. But I think the trend we're seeing now is that some of those are starting to stabilize. Operators have gotten more efficient and leaner. And I think that's one of the big things we've seen in 2022 and 2023. And I think that pairs really well with the potential for Schedule 3 and more money potentially coming into the industry if all goes well. Because if the operators hadn't found religion in terms of focusing on cash flow or lowering those expenses, then I think when people that were more sophisticated investors came in, they wouldn't find as many things in which they wanted to invest. And so I think in these legacy markets, what you're seeing is prices stabilizing, and there are going to be some profitable markets in these more normalized environments. On the flip side, you see some of these newer markets, and I see Maryland over here. And so Maryland is kind of like the New Jersey of 2023, where New Jersey came online, had monster stores in terms of sales. They had high margins, they had high prices, and that's tapered off a little bit. And we expect to see that. And now Maryland's seeing the same things here. We don't have it. That number up there is a little bit misleading because the first half of this year, that 274.8, those were medical sales only. Maryland flipped rec on July 1st, and sales went up on average a little over 2x. I think they went up about 122% was the latest data I saw. So I like to monitor, Josh, what's going on in these legacy markets like your Californias, Colorados, Washingtons, and Oregons. What can I learn from there? And then let me look at these new markets, your Marylands and your New Jerseys, and say, okay, those are limited license, different dynamics. You have to pay attention to the cultivation versus store ratios. But broadly speaking, we can learn from these legacy markets that things aren't going to stay as great as they are right now in Maryland and New Jersey. And we can speculate a little bit about how those markets will evolve and how those prices might compress over time. And that same logic applies to Ohio, which just flipped. And then, of course, we have some big states like Pennsylvania, Virginia, and even Florida that may flip as soon as 2024.
You and I might be the only people that have noticed that there's some patterns here, and to look at existing states, because I don't think anybody else, it doesn't seem like, from my experience going MJ BizCon and talking to other people, that anybody else is looking at it that way. But I think there's a lot to be said. Before we get to consolidation that you mentioned a few minutes ago, and some of the contraction and changes in the industry, we'll take a look at year-over-year sales growth, which is negative really across the board. British Columbia was late to open. Depending on who you ask, might be that Hell's Angels has a tight knit. If you're into the conspiracy theories, it might be that it didn't make business sense until 2.0 was closer. But regardless, what you're seeing is a slow uptick as more and more stores open up. Same store sales, which we'll get to in a few minutes, went up significantly. Michigan, again, the outlier in terms of year-over-year sales growth, obviously still there, but for the most part, pretty bleak.
Yeah, looking back to BC, Josh, I was been talking to some Canadian operators lately, and I'm not hearing great things, not necessarily on the cannabis side, but on the consumer spending side, that apparently, wages are fairly stable, but housing costs and inflation have gone up so much in Canada that we're seeing lower spending on cannabis or consumers downshifting. And that's another thing that you're very aware happens, right? If let's say you have 20% less money to spend, you may still get your cannabis, but you might shop more on THC per dollar, which people like you and I know, Josh, that THC isn't the perfect metric, but a lot of consumers will shop just based on THC per dollar. So what I'm hearing out of BC and Canada more broadly is expect to see some lower numbers in Q4 and even into Q1 as people are downshifting, moving away from premium and looking at more affordable products. And I think that's another trend we've seen in 2023 is for a while in cannabis, everybody thought you wanted to focus on premium because premium has the high margins. You got to grow indoor flowers. You got to have fancy concentrates and edibles because those have higher margins. Well, that's true. And during that COVID period, I think that worked really well. But in this newer environment where everybody feels like they have a little bit less money because of everything else around you got more expensive, people look at cannabis and say, okay, well, I could get the $45 or $50 indoor eighth if I had that kind of money, or I could shift down and get something that's greenhouse grown. I might even grab the smalls for 25 or 30. There's more affordable ounces coming out now. Milled flower is a thing in Canada, Josh, which goes against my cannabis values. Like I'll grind up my own flour. Thank you very much. I don't need it pre-ground and drying out in the bag while I wait for it.
My brother-in-law does it for the same reason you're talking about. Like Canada's in a recession, they're struggling, but my brother-in-law has been struggling, so he gets that shake too. He'll buy a $30 ounce of shake, but then he'll make butter with it. But I'm with you, man. I'd rather buy my own ounce and ground it. But for some folks, that I'm hoping that the majority are using it for something else other than smoking. But grind your own, folks. Come on now.
Yeah. So anyway, as it goes to Canada, I think we might see softer numbers for that second half of the year and into early next year. Still a tough environment there.
Absolutely. Year over year sales growth, though, if we take a look at the last few years, you can kind of see obviously early on they were crazy, and that's with any new market. You're going to see a lot of people, even from Texas right now is boosting the sales of their neighbors. Idaho is helping out Oregon and Washington. So some of these numbers are a bit inflated because they're coming from outside. Especially early on, you'll see it more leveled out and normalized as time goes on down to 2022, 2023. You can kind of see from the numbers there that Alberta was at 92% growth rate, and then now they're more stabilized around 10. That's a perfect example of the excitement and you're trying to buy everything and figure out what you want. And then when you do, you realize it's convenient and you just go when you need.
Yeah, and in some of these numbers, what I also like to look through, it would be changes in unit volumes versus changes in price, because sometimes people say, well, cannabis is not a growth story because I see that, for example, Oregon price sales are down 3.9%. So that can make some people think people are using less cannabis. Usually that's not the case. Usually that means that prices have come down. So revenue has dropped, but often unit volumes are up or stable. When you look at these Illinois numbers, that's what's happening there. When you see that 1.8 number versus the previous year being 8.56, is that you're seeing more competition in terms of cultivation. You're seeing prices come down. You're seeing more stores, which in some areas are creating more price competition. You're seeing in Illinois, Josh, I'm sure you're aware of this, but with Missouri flipping rec, right? A lot of those big stores down on the southern border, like Ascend had a store in Collinsville, which was a monster store. I don't want to say what the number was, but it was one of the best stores literally in the country. But once Missouri flipped rec, people stopped going over the border from St. Louis.
Right.
So when we're looking at new markets too, it's always interesting to say what's around you. And are you getting some of that action from other states? And then when those states flip, how is that going to impact you? But the bigger point of seeing these numbers is Yeah, not terrible, not awesome, but I think the lower numbers are usually a result of price compression rather than truly less cannabis demand. And that price compression has been remedying itself in some of these markets. And the way that's happening is that you're squeezing out the people that have the higher costs because they just can't compete. We've seen this in California, where I live, where we've seen the canopy drop so much this year because people just
Mhm.
there wasn't enough margin in it, and there was the price that they were getting was less than their cost of production. So a lot of those operators just threw in the towel. That's
Mhm.
been great for some people, like Glasshouse Brands, for example, who has the very low cost of production and is well capitalized. And as these other farms go out of business, they're able to step in and capitalize on that. I like that for Glasshouse. I do feel bad for some of the legacy growers, the people that helped build the industry that now have gotten squeezed out because they weren't true low cost producers. But I
Mhm.
think across these different markets, you're seeing one trend we've seen this year is that you do have to lower your cost of production as these prices at the register come down. Otherwise, you just don't have the margins. And I think a lot of these states you have seen operators getting more efficient, which I think is a necessary step.
Absolutely. A lot more automation. That's one of the things I saw on the
Yep.
floor at MJ BizCon is a lot more acceptance. Whereas before it was like a luxury and now it's a necessity. So definitely seeing a lot more investment and people looking at trying to do large scale. But to your point of looking at basket size
Yeah.
and what people are buying on average, you can also see that coming down to as people are getting squeezed by the economy. It was $55 at the beginning of the year in California. Now it's down to 49. If you look at previous years, it was over 65 because I believe delivery was a minimum 60 or 65, whatever. And so the average was way up there because people were having that delivered. Now, not so much. They're walking in, they're spending a lot less, driving that average um, basket size, the amount that people are buying when they go in, coming way down. And it's even worse in places like in Washington, where I'm at, $30. And that's
That's
how much
cheap.
an ounce is. And you go in, it's convenient. They're everywhere. There's more stores than Starbucks. So price and convenience.
Yeah, and when you look at basket sizes, what I found is I ran a dispensary in California from 2016 to 2019. What I found is that during good times, people shop less frequently, but they buy more each time. So they might spend $200 at the beginning of the month, and that holds them for the whole month. And that leads to the data showing larger basket sizes because they didn't come to the store four times. They came one time and they stocked up for the month. So people have more money. I think the basket sizes go up because maybe they're consuming a little bit more, but they're going to the store less frequently too. What I found, Josh, is during harder times is that people still may make that bigger investment in the beginning of the month, but they might buy
Mhm.
2 weeks supply. Then they'll go once a week and figure out, okay, I got an extra $30. Okay, I got an extra $40. The other thing that's interesting is if you look intra-month, what usually happens is the first couple of weeks for us, especially the first week of the month, was by far and away the strongest because most people get paid on the first. Sometimes they get paid the
Mhm.
first and the 15th. So they pay their rent, they pay all their bills, and they say, okay, I've got a couple hundred extra bucks for cannabis, so I'm going to stock up and get my monthly supply. As things got harder and people had less money, they were nibbling more throughout the month and not making those
Right.
bigger intermonth purchases. So sometimes these basket sizes, I think this data is probably accurate and you can derive meaning from it, but I think sometimes the amount of trips to the store is also relevant.
Absolutely. And what you can see though is that the trend is that these prices are kind of coming down. It
Yeah.
really in all markets. Maryland is flat, Florida's flat, Arizona's reducing. Um, Washington, we've been around so long that yeah, we'll get to discounts and incentives and stuff, but Washington has got to put 30% 3 days a week just to get people to come in. And so you could see that that's
30% discount at the
yeah,
store. Okay.
the whole store is 30% off during the holidays, but generally throughout the year, it's Tuesday, Friday, and Sunday is 30% off. Um,
That's tough. That's tough no matter what, but that's extra tough, Josh, when you throw in 280E, right?
uh-huh. Yeah, because that means you're selling your ounces for $10 or less if they're retail at 30. So nobody's making any money.
Yeah, exactly. It's a confusing business model.
Yeah. Yeah. Well, I think that everyone here is since we are not vertically integrated and weren't allowed to have outside investors who weren't residents, that it's really kind of just said, okay, well, who can hold out the longest?
Yep.
And unfortunately, if it becomes federally legal, then none of them are going to be around because there's a lot of better other growers and manufacturers and retailers in other states. And so first mover advantages are a thing, but they're not really using them here in Washington. And I think the majority of folks here are going to be gone. I've tested 150 something strains in the state for a cannabis cup, and only 3 were worth it.
Really?
Yeah, it's really bad. And so a lot of them don't even deserve to be around.
Hmm.
Again, this is average, the annual average basket people buying. Absolutely, the trend is just kind of going down, and maybe that's
Yeah,
money.
as you pointed out before, Josh, which was a good point, tough COVID comps in 2020, 2020 and 2021 as well. But still taking that out, looking at 22 and 3, yeah, still coming
It's a
down.
slide. It's all obvious to me looking at it. Just it's a slide going down to either be compounding of price compression in the economy, and just normalcy of just going into a store and knowing what you want. Now you're not going to buy all these different things trying to try it out. You know what you want, you go there, and that's it. And there's less money in your pocket, and so that's obviously dictating how you're going about your business. But average basket size in Washington, which is I think a good predictor overall, is pretty damn low, $30. So if you're in a state, like Massachusetts, expect that to be in half in another couple of years.
Interesting. Yeah, I don't know if I think it goes that low in Massachusetts. You could be right. I think it could come down more. I think there's a couple of variables there, right? What happens with prices and what happens to the number of stores. And I think Washington evolved really quickly in both of these ways. And for example, in Massachusetts, you have a 3-store cap per operator. The cultivation footprint has actually been coming down there. Prices have still been going down in Massachusetts, but at a slower rate. They were stable for a few months, and they've been weaker the past couple of months. So I think, and I hope, Josh, that in some of these limited license markets, your Massachusetts, your Marylands, you don't, is this headset?
Yes.
Okay, so they don't cover New Jersey?
Not yet.
Okay. Yeah, so your New Jerseys, your Massachusetts, your Marylands, Ohio just made the flip. When your Pennsylvania's flip, when your Virginia's flip, some of these limited license environments, I'm hoping we see more stable prices there than we have in these open license environments, like your Washingtons, your Oregons, your Californias of the world. I think the compression does happen, but if I were, I would be surprised if it got as low as Washington, just because of the cultivation dynamics and the probably not quite as much retail competition, just because of the limited licenses. Like if you could only have 3 per operator in Massachusetts, you could end up, and they're really slow to open stores in Massachusetts, which sucks if you're an operator. I hear about people getting everything done and staffing a store, then waiting 2 months for the regulator to sign up and finish the paperwork. So I think these do come down a little bit more, but I'm hoping maybe not quite as much as we've seen in some of these legacy states.
Yeah, Washington had a limit of 3 stores. Now you can have 5, but then I've seen people have 10 through other partnerships, and so it's kind of really all over the place. Looking at the count of baskets, we'll kind of just run through this really quick because there's not a lot of data, but this is the number of products people were buying in 2020 and 2021. So in Washington, they were buying 3.5 products per basket. So you kind of see California, 4, almost 5, and then the next year in 2021, it was almost 7 products. So people were really trying a lot of things. Whereas in Illinois, if that's accurate, there's half a product? I don't even know how that's. So somebody was buying 2 and somebody, I don't even know.
Yeah, Maryland's 0.35, which is puzzling as well.
Yeah. So not really sure if that's going to help us because there's not a whole lot of data there anyways. The number of SKUs I think is interesting though. So jumping into that, Washington has 1,800 at one point, which is just crazy because you walk in and they're all on the wall. So it's not like you go to Illinois or Nevada where it's a tablet. It's all there and you're like, holy shit, I don't even know what I'm looking at. So I think there's a happy medium. Illinois doesn't have enough. Washington might have too many. But I think the trend is that it's going up.
Yeah, I think one thing I found from running the dispensary is people love choices and they don't want to buy the same thing twice. And so when I got into this in 2016, I had never sold cannabis before, never grown cannabis before. My dad had some health problems. Cannabis helped him, and that's how I got into the industry. And I thought somebody might find something that worked for their medical problem because we were a medically focused collective. And so, for example, the Death Star OG helps my back pain. So I'm going to buy that 3 times in a row. And that pretty much didn't happen. If something's good, people will buy it twice. It has to be awesome to buy it 3 times. And I've almost never seen somebody buy something 4 times in a row, especially in terms of flower. People always want to try the new thing. Like, last year was lemon cherry gelato. This year it's jealousy or jokers and, whatever the, permanent markers, another hot one now. And so people always want to try that new thing. So I do think a lot of SKUs are helpful, but 1,800 in Washington seems like a lot. Hard to find efficiencies for the operators that way. And also
Yes.
from a consumer, does that just get overwhelming, or do you just hone in on the stuff that you like and you buy that?
You try, and then they stop carrying the most popular vape brand in Washington, and then the edibles that they turned you on to, they forget to order, and the blunts that they turned you on to, they don't order them anymore. And then the flour, they only order in the first week of the month, and it sells out in the first 5 days, and then you got to wait 3 weeks. So, and I talked to the guy, I've got his number. I'm, Brandon, if you're listening, get your shit together. Honest to God, it's ridiculous. And so now the same store is trying to open up in Illinois, and I'm like, you guys, before you expand, dial it down first, because you can have a bunch of SKUs and that's great. But if you don't have your inventory under control with all of the options that are out there, there's no excuse for that. So count of SKUs, again, looking at it, it's got to level off. It has to make sense. You need some kind of software technology to tell you, to alert you. I mean, I even built a VBA in Excel for my wife and baking. If she makes a recipe, it'll tell her exactly how much she should charge for that based on the ingredients. If flour gets too low, there's an alert that flashes, and that's just in Excel. So I have no patience for, regardless of how many SKUs there needs to be a better way moving forward.
Yeah, and go back one slide if you don't
Yeah.
mind. Yeah, so look at that Florida number. So you talked about the lack of vertical in Washington, but when you see the low number of SKUs there in Florida, that's a consequence of mandatory vertical. So in Florida, you have to grow your own products. You have to manufacture your own things. You make your own pre-rolls. You make your own concentrates. You grow all your own flour. There is an emergency market where you can't get things wholesale if you have a cultivation issue and you need to supply your stores. But broadly speaking, there's not a wholesale market there. Couple of consequences in Florida. Number one, if you're a consumer, you have less choices, and that's right here in the data, right? Florida's a monster state. 22, 23 million people, 137 million tourists. Decent medical market can be a fantastic adult use market, but look at those choices. It has 1/5, almost 1/6 of the choices that California has. The benefit, however, is for the operators is they get the higher margins, right? Because vertical integration is one of the best ways to control your supply chain, but also to enhance margins. And I think, looking at next year, Josh, if we think about catalyst for 2024, number one for me is by far the potential for Schedule 3. But shortly under that, I think Florida flipping adult use is a big one. We'll find out in early April if it gets on the ballot. It has to first get approved to be on the ballot, and that's up to the Supreme Court in Florida. And then number two is that it needs 60% to pass. And so if you think about Ohio, which flipped adult use last month, that needed just 50%, and they got about 58. Florida's polling better than that, but 60 is not easy to get. So I think just when we look at Florida, a couple of things. What are the consequences of vertical integration? And I think broadly, it's probably worse for the consumer, but maybe better for the operators because the margins can improve. But number two is what's going to happen with that adult use vote. And Florida is a very, very meaningful state for MSOs. So there's over 450 publicly operated stores in Florida. Trulieve is the king, or we should say the queen, because Kim runs it. So we'll call it the queen of Florida. And they have, I think, over 130, I think it's closer to 140 stores in Florida. But another one to watch with Florida is Air. Air has about $125, $150 million market cap, depending on the day. But they have 62, 65, somewhere in that range stores in Florida. Verano's huge. Curaleaf is huge there as well. Cresco as well. So I think when you look at Florida, a few things to think about in terms of that market structure, but also realize that is a key state for MSOs. And especially if there's one name I'd keep an eye on there, I'll give you two actually. One is just Truly, because they have the most stores and the most scale there, and that's a key market for them. And they're funding most of the spending required to get adult use on the ballot, and we'll probably be pushing more spending to get the votes. But also, if you want to play on Florida, think about Air Wellness. They don't have the most stores. They have somewhere in the 60s, which is about half as much as True Leaf. But because of the low market cap, I would argue Air might be the most levered to the success of Florida.
All right. We got a couple of minutes to talk about same store sales. Brand concentration is obviously a significant. When you look at same store sales, that's coming down. So even as they're trying with, I mentioned the discounts, 30% in Washington State, still a challenge.
Yeah, same store sales will get hurt as competition increases, right? So in Illinois, you're seeing more of these social equity stores open, which is great, and that'll help feed the wholesale market and make that stronger. But if you were the only game in town, the only store in town, in your area, and all of a sudden a new store opens, that's going to hurt your same store sales. And so I think in a lot of these cases, it's because more retail is opening around them.
Mm-hmm. Yeah, it doesn't look great. It looks like there's going to have to be a lot more marketing and texting and getting people in the door at this point. Even looking at annual year-over-year changes, it doesn't look spectacular.
Yeah, I see a lot of emphasis on loyalty programs, which I think makes sense. It helps the consumer. You can get those points. Sometimes I'll go to a dispensary and I won't realize that I had $30 of loyalty points, and I'll get a free something, which is that's always nice. And I think for the brands, using those apps and having those loyalty programs is certainly one way to fight it.
Yeah. All right. I think with that, we're gonna have to roll this one up. I want to thank my guest, Jesse Redmond, Managing Director of Water Tower Research. Jesse, where can they get a hold of you at? Where are you at?
Yeah, so you can find me on social media, LinkedIn, Jesse Redmond, on Twitter, or X as we call it these days. It's at Jesse Redmond as well. You can find all of my research at watertowerresearch.com. Click on the sectors tab, click on the cannabis sector. It's free and available to all investors.
And I'll put his LinkedIn link in the show notes. But with that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.
Thanks for listening to today's show. To check out more great cannabis podcasts, go to podconnects.com. Here's a preview of one of our other shows.
Hey guys, Montel here, inviting you to check out my podcast, Let's Be Blunt with Montel, where we have candid conversations about everything cannabis. We have over 250 episodes in our library, and a new show drops every single Thursday. So be sure to subscribe, and if you like what you hear, make sure you leave us a review.